Welcome to Tax Insights, presented by Hawkins Ash CPAs.
Welcome back, listeners, to Tax Insight here on WOMT, the Lakeshore's good neighbor. We're talking with Debbie today from Hawkins Ash. Debbie, good morning.
Good morning. How are you?
I can't complain. I am ready for today's program, learning all about financial statements. So let's start off with the very first question of exactly what is a financial statement and what does a financial statement really tell me?
Well, there's three different types of financial statements. We're just going to go over the two basics today, which are the balance sheet and profit and loss. The third statement is a cash flow statement, and we won't be getting into that. But your financial statements tell you a lot about your company. They kind of summarize the certain time period that if you're using software, you're gathering that information by a time period, or if you're using an Excel spreadsheet based on that time period, their totals. It shows you kind of how much your business is earning and where your money is going.
Very important to know. So let's talk about what the difference between cash and accrual.
The cash basis of accounting is where, for IRS and tax purposes, you're only reporting cash that you've taken in and cash that you've spent. Anything that people owe you or any monies that you owe other people are not tracked with the cash basis of accounting. For the accrual basis of accounting, you're also going to be tracking money that people owe you or money that you owe other people. So for accrual basis of accounting, you're going to track things that are not necessarily cash in and out, but like invoices that you've already sent are going to be included in your income, or bills that you've received and haven't paid yet. Those are also going to be included in your expenses.
So talk to me a little bit more about what the income statement includes.
Your income statement is a summary of your business's profits and losses. They measure the profitability of your business, and you can kind of see which products are making you money and which expenses you might take a look at. Maybe you could reduce some of them. There's a couple different sections of the income statement. Your revenues, and of course, that's how much you're earning. Your cost of goods sold, which is the cost of producing what you're selling. Your expenses, those are more operating and selling expenses and overhead costs. And then there's other income and other expenses. These are not part of your normal business activities, but they do come into play because you might have interest that you're earning on a checking account. So that would be an other income. The income statement, you've got your income minus your cost of goods sold, minus expenses, plus other income, minus other expenses, and that's going to be your net income or net loss. And that's what you're going to report on your tax return.
A lot of information here on what is included on an income statement. Let's go and talk about the balance sheet. What does my balance sheet show me then?
Your balance sheet summarizes your business assets, more or less what you own, and your business liabilities, what you owe, and your equity, and that's what's left over after you pay any expenses. Your balance sheet pretty much shows you your company's net worth. So on your balance sheet, there's a few different sections. There's current assets, which are going to be your cash, accounts receivable, inventory. These are the most liquid that you can turn into cash within a year. The next are fixed assets. These are like equipment, different property that you might own, and they would take longer to turn into cash. Then there's liabilities. These are things that you owe. So your current liabilities are going to be accounts payable, short-term debt like a credit card, and then there's long-term liabilities. Maybe you have a car loan or a building loan that are going to be paid back after a year. And after the liability section is the equity, and that's what's left over. The equity represents your ownership, money you've invested as the owner, draws you've taken, and what your business has earned or lost in prior years. So the total of all of that is your equity section.
Debbie, a lot of great information here on today's program. As every week, listeners, if you want to get a copy, we always do podcast this show at WOMTradio.com. Debbie, in the meantime, how do listeners connect with the team over at Hawkins Ash?
Call your local Hawkins Ash office, and somebody will be able to get you in touch with the right person for your question.
Thank you for your time, and we'll talk to you next week here on WOMT.
This has been Tax Insights, presented by Hawkins Ash CPAs. Learn more online at hawkinsashcpas.com. Hawkins Ash CPAs, part of your business, part of your life.